and welcome back to GB News Live, where we're going to now assess the impact of that interest rate decision, with the base rate having gone up by 0.5%, 0.5%, to 3.5%. It is the highest for more than 14 years, but what else could be actually on the way? Let's speak now to business and economics editor Liam Halligan with On the Money, because you were on the money. It's, as you predicted yesterday, a 0.5% increase.
Yeah, we've been saying this for quite a few weeks, actually. The Bank of England has raised interest rates to 3.5%, up from 3%. It's the 9th interest rate rise this year. Back at the start of this year, this base rate, the Bank of England uses this rate to lend to the commercial banks. It's the lowest interest rate in the economy, was 0.5%.
Not that long ago.
Not that long ago. So this is a huge increase in interest rates over a period of time in proportionate terms, though interest rates are still rather low by historic terms. And there's a graphic there you can see. Back in 2017, rates were low in the aftermath of the global financial crisis. They were nudging up and up. Then we had the pandemic there in 2020, and rates went down to those emergency levels, down to 0.25% for some time. And then you see the step increases throughout 2022. So this will push up, I'm afraid, more variable rate mortgages, personal loans, credit card bills, and so on.
At a time when, of course, people are really hurting and we're heading to recession. However, it is the case that it could have been 0.75.
It could easily have been 0.75. So why didn't the Bank of England go for 0.75, 0.75%, because that's what it did last month? I think there are a couple of reasons, Mark, broadly. The first is that the economy is now slowing quite seriously. We had those numbers from the Office for National Statistics just last week saying in the last quarter to October, the 3 months to October, the economy shrank, and it's looking as if it will shrink in this quarter as well. That's a recession, 2 successive quarters. And then at the same time, the pound is rising quite strongly, particularly against the dollar. The pound's up at now $1.23. It was down at $1.17, $1.18 just a month ago. So again, that's a big proportionate increase. That stronger pound, that means that when we import things, particularly fuel, oil and so on, priced in dollars, that is cheaper, and that helps us to bear down on inflation. So this isn't great news, but it could be worse. It could have been worse.
And clearly the important thing today as well is that we get the Bank of England indicating in its briefing what it thinks is going to be happening. Now, they were thinking about inflation at topping off at about 13%. And we were talking yesterday, it may well be that this rate we've got at the moment, 10.7, that may have peaked. British Chamber of Commerce saying that they think it's peaked. So things may get better.
Fingers and toes crossed, Mark. It went from inflation in the year to October was 11.1% in the UK. It was 10.7% in the year to November. So hopefully that means it's going to start coming down now. I've warned repeatedly here on GB News, one school that we could see is if there's more a kind of uptick in the strife between Russia and Ukraine that pushes up gas and oil prices, or an even colder snap here in Western Europe. But it looks increasingly, chancing my arm, that inflation has now peaked, and so the cost of living, while still rising, will start to rise now at a slower pace.
And the key to that is it's not, of course, just the effect it has on people's pockets, but all these industrial disputes, these strikes and so on, they're basing their pay claims on that rate of inflation. So if that comes down, it buys the government a bit of wriggle.
A lot of these negotiations, they're not just about pay increases this year, they're about pay increases next year. So, for instance, the government, we're told, we're not quite sure, offered some of the rail workers around 5% this year and 5% next year. That 5% next year, again, we don't know, but that may be above the rate of inflation next year. And so these inflation numbers, and in turn these knock-on interest rate numbers, they do set the context for all these pay negotiations. So this isn't great news, but it isn't as bad as it could have been.